Good morning, everybody. We have a sharply lower trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. March corn futures down 11.5 cents at 514.5. March soybeans are down 29 and 3/4 cents at 13.56. March Chicago wheat is down 15.5 cents at 6.56 and 3/4. March Kansas City wheat is down 9 1/4 at 6.34 and 3/4. March spring wheat down 7.5 at 6.36. So a sharply lower trade here this morning. Before I get started, I just wanted to say thank you to everybody. In the first year of the podcast, I've been doing this for about a year now. In the first year, Grain Markets and Other Stuff has had over 300,000 downloads in terms of the podcast, and the YouTube channel, which is much newer, just crossed over the 1,000 subscriber mark as of yesterday. So I'd really like to thank you guys for listening. And as always, remember, if you need some more information from me, guys, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. If you would like to know when, how, and specifically I'm pricing corn, soybeans, and wheat throughout the calendar year, sign up for this subscription service. It's $49 a month. I'll send you my newsletter, which goes out every morning at 6:30 Central Time. That includes every overnight headline that you need to be aware of. It includes all of my marketing recommendations that goes along with the text message service. This is a deal that you can cancel at any time. It's billed to your credit card automatically, so if you sign up for it for a month or two, you don't like it, you can cancel it. You don't need to have a trading account. You don't need to be a futures trader. You can follow along with this stuff without any of that. So just wanted to make you aware of this again, as I always do. To get started here this morning, we've got a sharp sell-off in the markets. The soybean market, or soybean futures, have lost more than 70 cents per bushel from last week's high. I'm not surprised by the sell-off. What I'm surprised by is the fact that we have not seen more setbacks of this nature during the course of a rally that spanned $6.30 per bushel from trough to peak that occurred from late April through last week. Spot month soybean futures bottomed at $8.08 in April, and they traded, $14.38? Was it last week or earlier this week? That's an incredible rally, and the amount of setbacks that we've seen during this rally have been very, very minimal. So I'm not surprised by this kind of volatility. What I'm surprised by is that we haven't seen more of it. I don't know that there is necessarily one single reason for the correction here this morning. This sort of volatility and in both directions is typically par for the course in this sort of market. This rally, in my opinion at least, has been odd in regard to the lack of setbacks. And you can say that for the corn market too, which rallied, $2 a bushel without any real setback. So I'm not surprised by the setback. I'm surprised that we haven't seen more of this stuff, to be perfectly honest. The U.S. dollar has stabilized. The greenback was able to hold above those lows from 2018 earlier this month. It's posted a marginal recovery. And, despite that recovery, the commodity markets here overall are still very strong. The Bloomberg Commodity Index tracks a basket of U.S. commodities. It's only like 2% from its recent high after a 38% rally from its March low. So the dollar, despite the fact that it's stabilized and recovered just a little bit, has not yet negatively affected commodities as a whole. And maybe that's something that you see ultimately. Recent rains likely helped crops in South America. Rainfall throughout the growing season, Brazil and Argentina has been largely below normal. But they did catch some rain over the weekend, and I think they've probably had enough to avoid any major crop disaster here. The forecast calls for drier than normal conditions across a lot of Brazil during the next 2 weeks. Argentina is going to be dry for a week, but then the 7 to 10 day period looks a little bit better. But still, even though we're below normal, most of your key soybean growing areas in Brazil are going to see 2 to 3 inches of rain between now and say the first couple days of February. Truckers in Argentina are beginning a strike. Apparently, exporters are growing concerned as independent truck owners block roads as part of a protest. They're not happy about high taxes and highway tolls, I guess. These sort of labor issues are so commonplace in Argentina. It's like every day we've got some sort of new labor issue. But of course, these things need to be monitored. Argentina is the world's largest soybean meal exporter and is the third largest exporter of corn. Drought will persist over the U.S. plains and parts of the western Corn Belt. really not a whole lot of rain at all in the forecast between now and say the first couple of days of February. The one exception here is Kansas. A good chunk of Kansas, according to this morning's map, we'll see 1 to 2 inches of rain between now and February 5th. Your other drier areas of the plains in the western Corn Belt, North Dakota, South Dakota, Iowa, Nebraska, Oklahoma, Texas, really very, very minimal in terms of expected rainfall. So this drought is not going away yet. Financial markets generally stable ahead of today's presidential inauguration. Joe Biden will be inaugurated as the 46th president of the United States at about, I think it's going to be 11 a.m. Central Time this morning. Despite a number of potential policy changes, uncertainty, turmoil, whatever you want to call it, financial markets have been relatively stable. I mean, you've got the stock market still close to all-time highs. The bond market has set back in recent weeks as interest rates tick higher, but in general here, not much turmoil at all, really. I wanted to talk a little bit about crush margins in soybeans, and we've seen crush margins really deteriorate here, and this is kind of a shift from what we've seen throughout the course of the rally, and it began kind of in mid-December. This is a chart of the May board crush. And I've talked about this a little bit on the radio here recently, and I've had a couple of questions about it. This is a good way that we can generally gauge what sort of profitability there is in crushing soybeans. And just in regard to the board crush, I mean, profitability has fallen drastically here. It's fallen by, 30% just over the last few weeks. Now, you never know exactly what's going on in terms of what's happening at a given facility or within a given company. These companies may have locked in better margins all the way through the calendar year for all I know. But this is a potential indicator that we could see some reduced soybean demand potentially. Probably not right now, but maybe like second quarter, third quarter, that sort of thing. I figured it was worth showing you that chart here this morning. The cattle market, we did see some very light cash trade that was reported at like 105 yesterday. The board was kind of a mixed bag. It was sharply higher at one point in time. Outside markets, the S&P is up 14 points here this morning. The Dow is up 44. The gold's up about $9. We've got the U.S. dollar just a little bit higher. We've got crude oil up 65 cents in the March WTI at 53.65. I'm sorry. Remember, if you need some more information, check out that website I showed you earlier. Everyone have a great day. I will talk to you a little bit later.